Good afternoon, everyone.
Welcome back.
Hi, Patrick. How are you?
I'm good. So market is closed. Was a perfect week, I will say. Yeah. So Monday was starting strong with Nvidia. Now we have Tesla earnings ahead. So it's a strong week. So we have no big economic data was showing up, but the week was starting strong. We're getting now the first big earnings. So I'm born ready for the week. So let's go.
Yeah, let's go. So before we start, as always, a short disclaimer very quickly. And again, please send us comments, questions in the chat. So today, we're really going to focus on Tesla. Big earnings tomorrow is going to be a very, very important event that is probably going to drive the market. And here what we see is basically kind of like the stock price of Tesla, and we can also look at the latest quarter. So obviously, latest quarter was not positive, although the revenue had a positive surprise or positive results. The earnings kind of like were negative. As a result, you saw a big drop in the price. We saw like a downtrend where the stock reached the low of 182 or around there, and then we saw like a new trend kind of starting, and now we're seeing some drop following the event that we had a few days ago. So tomorrow is going to be very key. The market is also at all-time high, so we have like a lot of pressure on the general stock market. So when we look at Tesla, obviously, we have to analyze what has happened in the past few weeks. Obviously, the event of the robotaxi and the plans on robotaxi and electric vehicle has kind of put a lot of pressure on investors. The sentiment on the stock is changing. So we want to really show you today what you can use within the tools that are available at your disposal to understand and formulate a theory for what could happen tomorrow. Before I start, let me know, Patrick, if that sounds good, or if you have any questions.
I have no questions, so let's go.
All right. So the first step that we want to look into, I'm going to share a chart, and I think this one we shared it in the session before. So it's the beginning of the earnings season, and tomorrow we start with Tesla, but next week we're going to see the big tech earnings and the big tech events. We saw also like a big push from Nvidia yesterday. Here what we see is an interesting kind of like chart that we want to share with you, which is the skew, the MenthorQ skew, which is the 25 delta skew, which is looking at 25 delta puts and 25 delta calls, and the implied volatility on those calls and puts to understand if the market is bidding more on the call side or on the put side. So here what we see on the left-hand side, we see a chart of the one-month skew taken as of today for the SPX. And you see that obviously the chart is more skewed towards the call. So we see that the implied volatility of calls is much higher than puts. You see it on the bottom kind of left chart. On the other hand, we have the QQQ skew chart that shows a completely different picture, where we see an increased implied volatility on the put side over there. So obviously that's interesting because, again, we are starting our tech earnings, and we see obviously the market has probably a lot of pressure on the tech stocks. We can also see here, looking at the NetJacks chart, on the left we have QQQ, and on the right we have SPX. Although the market is kind of on a bullish side, as you can see from the NetJacks chart, we started seeing a big accumulation of out of the money puts, and obviously that is normal because we're at all-time highs, and we're also at the end of the year, and we're also like going towards the US election, which is also an important event that is going to have an effect. So we see a lot of additional protection coming into the space, as you can see from the chart here. If we go back to Tesla, let's go into Discord and let's look at some of the things that we can do to actually understand what's going on with the stock. So the first step is really the main chart that we provide, which is our net gamma exposure chart. So we want to really see what the chart looks like. So we see obviously here there's a big core resistance level at 225. This is like the widest green bar, but we see an accumulation of protection and net put gamma here at the 200 level, 210. So we see those big levels right here. And if we scroll back actually one day, we see a completely different picture, right? So clearly we had yesterday a lot of wider green bars right here and some accumulation right here. So obviously it's important to understand the change in these levels. Also monitor if there's any change in the main levels, the core resistance and the put support from yesterday to today. So kind of like the core resistance, as you can see, moved down. So yesterday our core resistance level was at 300 and today we're moving down to 225, right? So again, we talked about core resistance yesterday. Very important to monitor these levels, very important to understand what's going on. Then we want to look at the multi-expiration chart. So we want to see, for example, how is the market position at different expiration in the future. So if we look at, for example, the Friday expiration, we see our big core resistance at 232.5, and then we have our put support right here. And then we can monitor the next expiration for November 1st, and also the other monthly, the December 21. So we see like a big 225 level again holding there. The next step is, again, looking at the skew, again, for Tesla. So if we open up the skew, we also see a similar picture to what we saw for kind of QQQ, where we see like the implied volatility of puts being higher than the implied volatility of calls. So I think a lot of participants are kind of like worried about the event, and maybe they're seeking protection, and therefore the implied volatility of those out of the money puts is increasing compared to the previous few weeks. The next is looking at our swing model, and we're going to show what the swing model represents. First, we want to look at the 5 days. So if we look at our 5 days model, let's open it up right here. We see that our lower band level for 5 days is at 202.79, and our risk trigger is at 234.91. You see how the bands have changed over time, and you also see our success rate for the model. So when we look at success rate, the model is kind of like giving you a 5-day time horizon and a volatility band on the upper side and lower side. And the success of the model really represents if the price in 5 days is staying above this level and below this level. And if that happens, then the model is successful. So what we can see here is that over the past 37 days, those bands kind of held on 94% of the cases. We also have our 20 days model. So if you are looking for more longer term strategies and you want to like understand more like midterm and longer time frames, here we have our 20 days. So similar to the 5 days, we have our lower band right here. So the lower band in 20 days will be at 186 with the risk trigger at 250. And as you can see here, you have the backtesting results right there. Let me know, Patrick, if you have any questions from your side.
Yeah, I think many people will be curious who will listen to us the first time. How people can trade this based on options or based on stocks. If they see now, for example, on the 20-day swing trading model, they have the risk trigger 250 and the lower band 186.73. How they can trade this? So how they can build based on this and trade it? Of course, we don't giving any financial advice. we was as saying before, but what idea we can give them as a call to action?
Yeah, absolutely. So first, I think it's important to only go through what the levels represent. So here we have a 5-day and a 20 days models. And within the model, you could see 3 levels. One is the upper band, which we haven't seen it in Tesla, but the upper band is really the highest price that the level predicts that it could be reached within a specified time horizon. So whether it's 5 days or 20 days. And if you see an upper band on the chart, that could represent a very important resistance level based on options data and based on the model that we developed and we released a few months ago. Then you have the lower band. And the lower band, again, it represents a potential support level based on options data forecasted for the period that you're looking for. So whether it's 5 days or 20 days. So again, it could be, for example, an entry point. It could be a stop loss target. And we're going to show you how you can put that into the chart in a second. And then you have a risk trigger. So a risk trigger represents a level where there could be an increased momentum in that direction, because the model is also trying to forecast kind of like the trend in the stock. So if we go back to how to use the model, again, on the right-hand side, you would see the levels for today. And on the left-hand side of the chart, you would see basically the history of the levels and also how they perform if they were if you were to use them in the past. If we see, for example, an upper band in the chart, the model is providing us with a bearish bias. So that can be used, for example, if you are trading as an entry point, for example, for a short trade, or a target price, a stop loss target if you are in a trade, or it could also be used as trading options. So if you are, for example, in this case, you could be selling call spreads or selling calls above those levels, for example. If you see a lower band in this case, that means that the bias within the stock or the asset is bullish. And again, how can you use that level? It could be used, for example, if you are in a long trade as a stop loss target. If you are thinking about entering a position, it could be an entry trigger. And if you are using options, it could be a level that you can use on your put spreads or put selling strategies.
Yeah, good.
Yeah, and basically, again, if we go back here, the way you could potentially have used this is by selling options. And obviously, you are selling options, so you are pocketing a premium, and you want to make sure that the price doesn't breach that strike price that you selected. And in this case, you can see that the price kind of stayed all the time above those lower bands right here.
That's a great way to do it, I think.
Yeah. Let's see if there's any question from the group. Yeah, please, guys, feel free to share any questions you have. Right. The other thing that we can do is we can then add those levels directly into your chart. So if you type in our swing levels right here, let me make it bigger for you guys. We can actually type in Tesla. Then we can copy this text, and we can now have our levels directly into the chart. So let's go into 10 minutes chart. So in this case, what the tool is plotting is the last 5 days of levels. So here we have a risk trigger for the last 5 days and our lower band for the last 5 days. And why 5 days? Because technically the levels that you would have received 3, 4, 5 days ago would still be a play for today.
And basically what we can see, so if we get the earnings, if we get the movement, no matter in which direction, so we cannot looking in the future, but if it goes to the upside, we have a bunch of risk triggers in the upside where could be possible as a great area for taking profits. And also we have the lower bands, what could be also, if you be shorting, a great area for take profits or maybe a re-entry for the long. But this is something what you can use. So you can build your strategy with the swing trading models based on your A plus setup, based on your um, trading style, and this is something what can help you. So and we know, everyone knows this who was trading the Tesla stocks in the past, no matter if you're swing trader, no matter if you're day trader or you've been an investor, so we can have crazy moves. And I find this very useful from my side to have the swing trading levels on my chart for to know where I can possible taking my profits if I be short, or where I can be taking possible my exits if I be long, or where I can be re-enter, maybe for a short or maybe for a long. The same principle like what we have on the daily basis with our 1 day max and 1 day minimum. But now we have to set swing trading levels. And um, as I'm understanding this, if people think, man, the swing trading levels, they are really cool, but it's a little bit complicated, and we're getting good questions sometimes about this. But I think, Fabio, when we're speaking about for easy understanding, we're speaking about 1 day max, 1 day min, like the same like for weekly levels. But can we speak also, or do you think that this would be wrong when we speak about the upper band, lower band, and the risk trigger? Like maybe no, of course it's not the same principle, but can people thinking about, hey, think about call resistance, think about put support, and think about high wall. Risk trigger, high wall, we get the flip. This is why it's called the risk trigger. And put support, call resistance with upper band and lower band.
So I think, yeah, Patrick, actually, what we can do if we go into the dashboard and we go under our guides, I think let's go under gamma levels and let's look at the backtesting results on the 1 day max and 1 day minimum, right? So the idea obviously started because when we started developing this indicator, we will talk about it on Thursday on our live there. But basically, the goal is really to forecast with a good precision of accuracy where the price could be within the day. So the way our customer use this, they would use it for their option selling strategy. So if you are doing iron condors on SPX, then you could use those levels to understand, okay, where could the price be within the day? But you could also trade this directionally. Actually, we saw a very good like success rate of like, hey, if the price hits the 1 day minimum, then you have a higher chance that the price might retract or might reverse for the day and so on. So with that in mind, we started looking at the swing trading, because the challenge with the forecasting the next day is that, especially if you are selling options, you might not have a lot of premium because of the time decay. So for example, like, yeah, you could get enough premium to justify the trade or the risk, but what if you could forecast the same principle but with 5 days in the future and 20 days in the future? So that's why we kind of developed our swing trading model. And with the swing trading model, the goal is not only to forecast the band, so similar to the 1 day, but also to forecast the direction. That's why the risk trigger becomes a risk trigger, because it's really, if we are able to forecast the direction, then obviously the price would probably break that level. So it becomes like a level that will bring an increased volatility, because maybe there's a new trend that will start in that direction. So for example, if you are thinking of using this for selling options, I would only use the lower band or the upper band, right? The risk trigger would be your target level if you are in a long or a short trade.
Yeah.
If that makes sense.
Yeah. I think this gives more clarity how you use this, how you should use this. Also, as a stock trader, if you're speaking possible about the trader, so if you trade only stocks, so this could be all, you can use this also and there's no limitation.
Yeah, absolutely.
And I think also really cool would be if we showing in the matrix. So if we can look into this, how we see stuff going on the matrix, if there we see some change day by day, so we can look back 5 days. So to get a feeling how the matrix is also changed when we're looking to the jacks, decks, and also the areas.
Yeah, absolutely. So within the matrix is really like a simplification of the option chain. On the left-hand side, you will see the expirations. Here you will see the jacks, DAX, the percentage of gamma, delta, and open interest expiring at any given time, and the change in gamma and delta over the past day. And then you can also go back in time. So you can see, for example, is the market accumulating positioning on the call side, on the put side? Is gamma increasing or decreasing? How that is changing over the past few days? And that will allow you to also understand, okay, is the sentiment on the stock changing? And how should I position myself? And then you can combine that with the swing models and all the other data sets that we showed you in the past.
And you was seeing something special when we get earnings, like now we get earnings from Tesla, where people could be possible hedge if they're not using as hedging position Tesla. How they would be hedged. So maybe we can see an upper direction so that we get also any idea. Do you have any idea where we can look into it also for possible hedging positions?
So I would basically, what we showed before with kind of like the skew chart and looking at the macro kind of thing, is more like to understand, okay, like Tesla is one piece, but then obviously what is the overall market doing? So for example, like we could run our swing levels on QQQ, for example, and we could see where are the levels that you should consider over the next 5 days, right? So obviously Tesla is a single stock, but very big constituents in the index. But what if the levels on the QQQ change? What if there is an inversion? What is the QQQ is becoming bearish, right? And now that could have an effect on Tesla too. I would also monitor, competitors. Maybe like you want to monitor Tesla's peer group and understand, okay, what is the sentiment and what is the swing model telling me on those companies, and then obviously the overall kind of market, right? Understanding the risk there. So obviously from a top down or bottom up approach, yes. And then obviously monitoring kind of like the big net gamma strikes. So for example, here we have our 225 and we have our 200. So obviously that's like a big number to monitor for tomorrow, and 225 for a potential kind of like squeeze to the upside.
Yeah, and also very important, if you're looking intraday into this, look to the jacks and the exchange. Did we have positive or negative decks? If we have positive or negative gamma, and understand what this possible means. So if you have positive gamma but negative decks, or positive decks and negative gamma, so that's a quite different approach from the market. So this is also really important to understand if you're looking into this.
Yeah, and also if we go back to the dashboard and we go and look at our screeners, we actually have what you mentioned. We have a screener that shows the highest change in gamma. So for example, here we saw yesterday a big push on NVIDIA, and as a result, we saw like an increase in accumulation of positive gamma right here. We see some accumulation on Amazon, and obviously the earnings are next week. We have Google over there, but we also want to see the negative change in gamma. So you want to see if, for example, there's anything that could spike your attention. So there's negative change on SPY and SPX, right? On QQQ also right here. So monitoring kind of these flows is also very important to have an idea of what a stock in that sector could actually be doing.
And to get also an idea about possible hedging positions.
Yeah, absolutely. Let's see if we get any questions. Can you guys comment or send in the chat? Let us know if you have any questions on what we talked so far. No questions. What about you, Patrick? Do you have questions?
No, I have no questions, but I would say like we was doing really good sessions yesterday and today about one of the major gamma levels. When we were speaking about put support and we were speaking about call resistance, and maybe as a homework when we come back tomorrow for the earnings or the day after the earnings, I think as an intraday trader or as a day trader, it's really important to understand what are really the call resistance are, how you can trade this, and also put support. And if you looking into this as a small little homework, I will say like you become a little bit better as a trader, if you understand this.
Yeah, I think, yes, exactly. Today we had a couple of really good sessions that you can find right here under our lives on YouTube. Tomorrow we're going to be back tomorrow afternoon. We're going to talk about the IVOR level. Very important, gamma flip, gamma shift. We're going to show you how that level work. And then we're going to talk about the 1 day move on Thursday and the JAX 1 to 10 on Friday. So the rest of the week is going to be very interesting. You can learn how to actually use those levels. We gave like some really good insights today and yesterday, and we're going to continue doing it for the rest of the week. So absolutely. And then obviously tomorrow we're going to see what Tesla does. So maybe we'll talk about it on the session on Thursday as well. But that will be definitely interesting to monitor the earnings, see if obviously the models could have helped in defining your plan, and then we can look back into it.
Yep. And I think it's a good also a good idea. So when you're trading futures, most of the time when I was trading the earnings, if it's Tesla, if it's Nvidia, call it whatever you want, big earnings, and we have this after the market. I was personally love to trade this when we have the calls. So then you can go into the futures and the Asia session, or when the futures market open after the 1 hour break, and then trade this. So this is a really good idea and a good trading idea for you maybe to look into the futures for the earnings calls.
Yeah, absolutely. Yeah, and then obviously if we look at next week, really interesting earnings. We're gonna have starting from Tuesday, Google, Visa, Pfizer, McDonald's. We have Microsoft, Meta, and I think Thursday is Apple and Amazon. So like next week actually will be very, very interesting. And again, the market is already reacting, so you can already look at today what the market is doing for next week. So looking at this data can give you some ideas of how worried the market can be and what could be the outcome for those companies.
And I think AMD is also really interesting to see if how they would be perform to get any idea about the semiconductor industry.
Yeah.
Because he's the first one from people who day trade like AMD, like Intel, like Nvidia. So I think it's good to know how they perform also.
Yeah.
A lot of action. And then we are November, and in November we're getting huge action.
Yeah. And then
we have of course CPI. We get some other crazy events, so we were not speaking about this, but it could be really important, and it could be a nice price action.
And then we will be releasing our intraday gamma levels. So that's going to be
the market goes crazy.
Yes. So I can't see any comments right here. But again, if you guys are not part of our mailing list, you can actually create a free account right here, and you can get access to all the free tools that we have available for you. So you have access to one of the free screeners, you have access to our free academy, you have access to our guides right here. So all of the things that we talked about it today can also be looked here. We have a guide for every graph and charts and product that we have. And then you can also come into the academy and look at the different courses that we have. And we have one on swing trading right here. But we also have like courses on trading with MenthorQ, key levels on forex and crypto, trading integration, all of that stuff. We also have our premium course where we have live sessions. I think, Patrick, you did about 28 live sessions with us over the past few months during July and August. So here are all the live sessions on futures trading, how to build a roadmap. And I think to thank everyone that is here until the end of the week. If you want to join our yearly plan, you can use this coupon code LIVE40 and you can benefit from a 40% discount. So to activate it, simply come to our account page, select our yearly plan right here, and then choose one of these options and apply the coupon code LIVE40. This will give you access to all the tools and all the courses that we have within the academy. So it's going to be a very big added value, and we want to thank you for spending time with us today. And we want to promote this until the end of the week. For any questions, this is our email, info@mentorq.com. So please feel free to send us any question you might have. And again, we'll see each other tomorrow. We have a 3 live more session for the end of the week, and then we're going to monitor what Tesla is going to do. What do you think, Patrick?
Yeah, 100%. Yep.
All right. Then thank you, guys. This was a quick one. Hopefully we gave you some insights on how to prepare for tomorrow, and we're going to see each other again very soon, and see you in Discord.
Yep. Have a good one.
Bye.
Bye-bye.
Bye-bye.